Well, good morning, everybody. Welcome back to the ROS Media channel. My name's Andy, and I'm the head of the media channel here at Republic of Old Souls. I'm back again with my good friend Iain Clifford. We're going to talk today about another one of our protocols on the Protocol Pep Talk. And today we are going to cover the Commerce Protocol. This is something that we've had a lot of interest in just recently, particularly with entrepreneurs and business owners. And before we kind of kick off, there was one thing that you said, Iain, about the protocol, this particular one. You said, or you described this as the world's most complete private living structure for business owners, professionals, creators, entrepreneurs who want to trade, earn, and operate outside the public corporate system. And that this would be free from reporting, taxation, and digital ID restrictions, which I know is something else that a lot of people are very concerned about at the moment. The government having or getting its claws and its eyes into everything that we do, including maybe a business that we run. So great to have you with us again, Iain. The whole purpose of this is to make it sound easy and to make sense for people as well, because if it makes sense, then they're far more likely to be able to apply it in their lives. So my goal today, guys, is to, as we did before, just have a chat with Iain about the Commerce Protocol, understand a little bit more about how it works, what the benefits are, what type of questions people have been asking. Do they have any concerns over trying to run their business in this way as well? Because we want to cover those. And I'm trying to think about this from the angle of what would a business owner ask? What would one of our members maybe ask or be concerned about over and above just the technical side of things? Because I know we're going to cover PMAs and 508c1As and all that good stuff as part of the mechanics of this. But practically, how can I apply this either to a new business I'm thinking about launching, or maybe an existing business that I've had for years, and what are the benefits versus implications of doing that? So welcome to the channel again, Iain. Great to have you with us.
Well, thanks. And I enjoy talking about these things because I've got a lot of creative skill, I think, into developing these protocols. And one of my challenges is to make sure that people understand, what it's all about and how it works. But more crucially, why it works, because a lot of things sound really good, but they don't really have any substance technically. So these discussions, although they're fairly high level, I'm gonna try and explain why these things work, as well as not all these great benefits that we promote in our in our various channels. But there is a lot of technical substance behind them all.
Yeah. And I think maybe for a business owner, that's probably one of the things that may concern people the most, in that they're busy running a business. How on earth am I going to find time to completely restructure or change my business to be able to do it this way? So lots that we want to cover today. There are specifically 7 top questions that we've had since launching the protocol that have come directly from the membership, from business owners. So why don't we cover those? And then I'll be thinking of other things, no doubt, during the course of the conversation, and I'll kind of bring those in if and when needed. So the first question, Iain, very, very simply, is what is it? What is the Commerce Protocol in real simple terms?
Well, in very simple terms, we're all programmed and conditioned to operate commerce publicly. So, when I remember my very first corporate venture was when I was 19, and everybody tells you, oh, you've got to have a sole tradership, or you've got to have a partnership, or you've got to have a limited company, or you've got to have a business bank account, you've got to have an accountant, you've got to file returns every year to whoever your if you're a professional like I was, I had to do all my returns to the financial regulators, and all of these things, which are, in my language, in my my way of describing it, they're all on the monopoly board of commerce. So you've got this artificial monopoly board, and all of these structures sit on the board. And if you're sitting on the board, in most cases, you've got to report what's going on to the owners of the monopoly board, which is not us, by the way. That's the cabal. So if you're sitting a sole proprietorship or a partnership or a limited company or an LLC or any derivative of those on the monopoly board, you're going to have to report in line with the statutory constraints that govern all of those structures. You're going to have to report everything to the tax authorities, to the regulators. You're going to have to comply with a whole range of statutory obligations. And if you don't, well, you're probably going to get fined. You might lose the structure. Banks aren't going to want to operate accounts for your structure. You're almost certainly going to have to employ an accountant. I sadly had accountants and auditors because my business was very substantial. So I had to have auditors. So you're paying, massive amounts of professional fees. I had corporate lawyers. I had a corporate accountancy firm, one of the biggest in the UK. I had auditors that had to come in and audit all of the commercial activities, everything. And you add all the fees up, and it's absolutely staggering how much you're paying out in professional fees, or what's called professional fees. Now, not everybody's going to be in that category because you might be running a small venture, sole trader, and you're making a modest amount every year, but you still got to report everything and pay taxes to the tax authority, whoever that might be. So that's public. It's all in the public. And when people come along and say, "Oh, I can save you taxes," for example, back in the day when I was doing wealth management, there was a whole range of tax avoidance schemes that you could engage with if you wanted to avoid taxes. And these schemes were promoted to entrepreneurs, and because most entrepreneurs, the successful ones, of course, they pay higher rates of tax, and they're paying corporate tax, they're paying personal tax, and there was a whole industry of tax avoidance schemes. And more recently, things like the Employee Benefit Trust, the Remuneration Trust, a lot of people may still know what they are, film partnerships, and all manner of things that were created by the tax avoidance industry to avoid taxes on the income for the business, whatever the business structure was, whether it was a sole trader, a partnership, a limited company, whatever it was. These tax avoidance schemes were developed to try and reduce corporate tax and personal tax. And hundreds of thousands, if not millions of people, certainly in the UK, in the entrepreneur level, went into these schemes over the last 25, 30 years. And most of them have been defeated by the tax authority. And there's dire consequences. Some people have been made bankrupt because they avoided taxes for a long time. And they ultimately, the HMRC in the UK, which is the tax authority, if you don't know that, if you're not in the UK, eventually catch up with all these schemes, and they actually outlawed them all, and they can make you bankrupt. So entrepreneurs have been seeking a more tax efficient way of operating for a long time. Well, what's happened in the last few years, of course, is digital ID. So you've got this extra layer of reporting. If you're not in the professions and you're running some sort of regular business venture, you're now going to be tracked and traced on everything that your business is doing, which is different from where it used to be. And of course, when I was doing wealth management, fund management, financial services, we had to report everything to the regulators. But this is a next level of track and trace, and if you like, it's sold on the basis, oh yeah, we're trying to stop the criminals coming in, we're trying to stop the immigrants coming in, we're trying to stop money laundering, we're trying to, we're saving the world through more digital surveillance. That's their story. Of course, those that are aware of the agenda No, that is literally just a story. So everything in the public side is basically it's surveillance, it's reporting, and it's taxes. Now, that is a choice. That might be a surprise to a lot of business entrepreneurs who will say, well, how can we choose not to do those things? If we don't do them, surely we're going to be involved in evasion, and we might be, fined, or we could be, at worst, you could be put in jail if you don't do what the alleged authorities want you to do. So I'm not here today to talk about evasion.
No.
And I'm not even here to talk about avoidance. Not really. I'm here to talk about the private. Because on the monopoly board, you've got most things are sitting on that board are in the public. But there are a few entities that you can put on the public monopoly board that you can control from the private. And the private, if you're wondering what do I mean by the public and the private, the public is basically corporate. It's artificial. It doesn't live and breathe. It is a construct, like a limited company, like a person, having been created from the registration of a birth certificate. That's the public. And then you've got the private, which is the living soul. And the living soul can't really step on the monopoly board without lots of problems, but they can control pieces that you put on the monopoly board. So in a nutshell, the Commerce Protocol enables you to control pieces on the monopoly board, on the public monopoly board, but without those pieces having to report income or, report any sort of transactions, if you like, to the alleged authorities. And you can do it all from the private. So you're operating public pieces on the monopoly board, but from the private realm, where the pieces you put on the monopoly board don't have to. It's not avoidance or evasion. They just don't have to report because they are exempt from reporting, and they are exempt from, and here's the big one, they're exempt from taxation.
That's a huge one for business owners. I think tax is the bone of contention for every single business owner. Every person who's working, everybody complains that we pay too much tax, don't we? We pay tax on our wages, and then by the time we've done that, you then take whatever you've got left and you go and fill your car up with fuel, and you're paying tax on the fuel, you're paying tax on the food that you eat. Everything is taxed. Now, I know we're not talking about tax avoidance on the things that we purchase, but that's part and parcel of what we can talk about and what we have been talking about with the infinite money protocol, where it doesn't really matter because you can reduce your cost of living down to zero by that infinite recycling. But when it comes to a business like this, I think that's a really good segue into the second most popular question, which is why? Why does the Commerce Protocol eliminate tax reporting and regulatory exposure? Because if you're still in the world of commerce and you're conducting business with other companies, other people, customers, whatever you want to call it, if that's in the public, how is it non-reporting?
Well, then you've got to really ask the question, what is being taxed? And if you go and have a look at the tax manuals, which I have done over the years, and try and find a definition for income in any tax manual, and you won't find one because there isn't actually a definition of income. It'll go round and round and round in circles. And there is no definitive meaning of income. And the reason for that is because there's no money. It's all kind of linked together. All of these things are linked together. There's no actual money. You can't make a payment. So how can anybody be making an income? So what they do is they rely on the presumption, which of course 99.9% of business owners will go along with this, that you have to report the revenue, which is you're telling the revenue collection that you've had a revenue, that you've had an income, even though you don't know what it is or your accountant now will report the amount of profit, whatever that's supposed to mean, because there's not a definition of that either in any tax manuals. Gains, profits, income is not defined. It just goes round and round in circles. It says if you make a profit, it means you've made a gain. So you're going to have a look at what does gain mean. If you've made a gain, it means you've made a profit. So it just really goes round and round and round in circles and never gets to any definitive what it actually means. So I had a good look at that, and that made me snigger when I was looking into that. And top accountants don't even know this. They don't even look to ask that question. What is the definition of income? And you look in any tax manual anywhere in the world, and it will not define it. And that's because there's no money. So when you look at, well, okay, so if somebody pays a fee, is that an income? Well, you might call it an income, but in reality, it's not, because there's no definition of income. If somebody pays a subscription, is that an income? Well, you might call it one, and you might declare it to be one, but it isn't an income either, because there is no definition of income. Well, what happens if you go into your local church and you put a £10 note into the donation? There's like a tray or a plate, donations plate. What happens if you put £10 donation into that plate, that donations plate? Is the church going to say that's an income or a gain? Or are they going to say that's a church donation?
I would have thought the latter.
I know the answer.
Yeah.
So they don't call it an income. They call it a donation. And a donation is not taxable income. So if you redefine the flows, let's just call them cash flows coming in.
Yeah.
And they become donations, not fees or subscriptions. Now you're not calling them income. And if you are set up as a ministry, which is part of the Commerce Protocol structure, all of the cash flows coming in are not described as income or fees or subscriptions. They are described as, because they are, donations. So that is the legitimate reason why a ministry doesn't pay tax, because it doesn't call its revenues, its cash flows, income, even though there is no definition of income.
Okay. So playing devil's advocate for a business owner, let's say I had my business and I was very, very keen on eliminating tax and reporting and any of this regulatory exposure to do with digital ID. But you're saying that I have to change my business into a ministry?
Yeah, so you can put you can create a ministry. In fact, we assist you in and facilitate the creation of a ministry, and you put that ministry. So instead of having a sole proprietorship or a limited partnership or a limited liability, anything, a company, LLC, or any of these other sort of corporate structures that sit on the monopoly board, is you put a ministry on the monopoly board, and your customers become envoys of whatever it is that your ministry believes in. So if you are, say for example, you are, and I'll use this, it always makes people chuckle, I think. If you were running an umbrella factory, what are you making? Well, you're making umbrellas. Well, why do people buy umbrellas? Well, they buy umbrellas presumably because they want to stay dry. Because that's, as far as I know, the main reason why anybody would buy an umbrella.
Yeah.
Well, if you believe in keeping dry, then if you want to keep dry and you believe in keeping dry, that's a good thing for you. That is, if you like, that is a cause. The umbrella factory has a cause. What is the cause? The cause is we help people to stay dry.
Yeah.
And if you want to stay dry and you believe in staying dry is a good thing, you can become an envoy for the umbrella factories outcome, which is the cause of its whole operation, which is to help people stay dry. Now, if you make a donation and in exchange for your donation, you receive an umbrella, well, what you've done there is you've made a donation to further the cause of the ministry to help people to stay dry.
Okay.
That is how it works.
That makes a lot of sense. And I know certainly more recently from even from a branding and marketing perspective, a lot of companies are going down this mission, vision, core beliefs narrative, aren't they? So while it might sound a little bit extreme, oh my God, I've suddenly got to change my business into a church. There's some subtleties here that people are already using in their business world. When it comes to, here's our mission statement, this is what our mission actually is. Here are our core beliefs surrounding our community or surrounding our customer base. It's really just a nuance in wording, isn't it, to make this a reality by the sounds of things. I know there's mechanics that go behind that, but I don't see personally how that should really trouble somebody or make them get a little bit concerned about what their customer base is going to think of them. It's not like we're asking them to suddenly put a church spire on the top of their commercial building and for them to declare that they are now a ministry. It's just a restructure of the mechanics of how it works and then using certain terminology along with that so that it all maps out. That's how kind of I see that. Maybe you could go into that in a little bit more detail about the donation side of things then. You've mentioned that if people are making donations to a church, that the church doesn't report that. And you can do the same with your business. If it's structured in this way, you've got a core mission or you've got a service that you provide. And as you described it with the umbrellas, obviously you're fulfilling that to your customer base, and they're giving you a donation for the privilege of staying dry with the umbrella that is given in return. So could you just explain, how does that donation, and you also mentioned grants as well with this as well, the donation, the grant, there's also a treasury side to this as well, in terms of how does that model work?
So in my view, I've yet to find one that doesn't have a mission. So whatever the business is, it has to have some kind of a mission. It's doing something to achieve an outcome, and that's its mission. And a missionary, So that's very similar to a ministry, isn't it? So if you are in business and whatever it is that you are doing, there has to be some kind of benefit to it. Otherwise, I would speculate that you're not going to last very long if you're not offering some kind of benefit to your subscribers, customers, call them whatever you like, clients, all different terms. So let's suppose that you convert your commerce into a cause. So your mission becomes your cause. Well, the cause of why you're doing whatever it is you're doing, that is based presumably on some form of belief that there is a benefit or a range of benefits that you're offering your community that is interacting with you, that might be experiencing those benefits once. They might be experiencing them over and over and over again if it's some kind of repeatable cause or mission that you're supplying to your community. Your community is your customers, if you like. So pick any corporate venture, unless it's not got any benefits that it's trying to promote to its community of customers, then it's got a cause. Well, in exchange for that cause, presumably if the customers are buying or they're subscribing or paying fees for those benefits, they must believe in them.
Yeah.
Because otherwise, presumably, they wouldn't be buying them or paying for them or subscribing for them. So if they believe in those benefits, which I think customers do if they buy something, then what they're really saying is that they've got a belief in the benefits. They believe those benefits to be good for them. well, then everybody's got the freedom to believe in any religion they want. So I'm not talking about a spire and a cross and or a book or some worship kind of process here. I'm just talking about what is a religious belief.
Yeah.
Well, you can believe in anything you like, and that can become a religious belief. So if you believe in keeping dry, that's a religious belief. If you believe in a football team, it's a religious belief. It's very, very similar. Rugby or cricket, whatever it is. If you believe in it and there's a community of people that believe in the same thing, that is a religion. It doesn't have to have a church building and a cross or any other kind of symbol. It can be just a belief in a common goal. Well, if an organization has got a common goal of keeping people dry in the rain, and the customers believe that that's a good thing, then they're all in a religion.
Yeah.
And that's a ministry. And then your customers, which become your community or your private members association, because it's very similar to a private community, they can donate to further the cause of the ministry.
Okay.
And in exchange for that donation, they get to receive some of the mission. Whatever the mission benefits are, they get to receive some. But they're not paying for those benefits directly, because what they're doing is they're assisting the ministry to expand its religious cause, and that's what the donation is. And a donation is not a taxable transaction, and the banks will open a bank account for ministries where they're not expecting the ministry to report its cash flows to any tax authority. So it's a big clue there on how to stay private.
Okay, so let's say I had my business and you had your business as a ministry, as you've described. So you had the commerce protocol in place for your business, and you asked me for a donation for the services that your ministry provided. But I run a conventional business, and I'm on the typical send me an invoice, I'll pay that, because that invoice is something that I can now report in my business as an expense, which is obviously going to come off my bottom line taxes. How does that work with a donation?
Well, any business can make a donation to a ministry, and it's completely 100% tax. You can set it against the revenues. If you're running a conventional business and you want to set that donation against your income, if you're still in that program mindset of believing that there is an income and that you need to set your expenses off against it, then you can do that. A donation to a ministry is a tax deductible a transaction. It's no different. If people want to stay in that public world and set their you don't have to go to your corporate partners and say, hey, we've just become a ministry, so now we can't you can't use anything that you might pay to us and set it off against your taxes. No, they still can, 100% the same as they did and are doing now.
Gotcha. And that's why I asked the question, because one of the things that I'm thinking maybe business owners who like the sound of this are thinking is, that sounds great, Iain, but how would that affect my ability to continue commercial activity with my existing customer base? Is it going to put them off? But clearly there are no barriers there. It's the same thing. Either way, if you've got a business that's in that tax mindset or in that normal reporting mindset, it's still something that they can take off the bottom line as an expense, because a donation is considered as an expense.
A person, a corporation, a partnership, they can all make donations, and there's no difference in tax treatment of donations. It's all 100% relievable against the income. Let's just say, in the matrix, we're just going to call it income. because everyone kind of knows what that means. So yeah, it's no different, and you don't have to completely change your pricing structure. You can keep the pricing structure as it is, but you're just reframing what is this? It's no longer a fee or a subscription. We don't invoice. We send out a notice of donation, and that's it. And so your customers, whether they're corporate, personal, whatever they are, whoever they are, they make donations. You don't have to change your corporate pricing because you've become, your donations are whatever you want them to be.
Okay. So what you said about pricing structure there? One thing that comes to mind is VAT. So how would that work? Because if you were, originally a company that was paying VAT, recouping VAT, and you were over that threshold, and typically when you would send an invoice out, you'd have the net amount, and then you'd have the VAT shown separately, wouldn't you? And then your customer would pay that, and then they would obviously reclaim the VAT, and so it goes on, and so it goes on.
Yeah,
would that put you in a situation where, if VAT is 20% currently, would that put you in a situation where you could potentially be 20% cheaper than your nearest competitor?
Indeed, yes, very astute. So you don't have to lay on top of your whatever it is you need to your cash flow you need to take in to make it all work for you. You don't have to then lay on top of that 20%, round it up by 20%. So you could be more competitive. Your ministry, if you're selling umbrellas for 80 pence, just for easy numbers, your competitors might be selling them for £1 because they've got to take 20% VAT out. Well, you don't have to. So yeah, if you wanted a donation, your donation could be lower than the price that someone else is paying for that, because they've got to declare and deduct a tax from it. So yeah, I mean, absolutely. If you can set your donation levels wherever you want, and there is no tax. There's no VAT. There's no income tax, corporate tax. It's a donation.
Okay. So there's a lot of benefits here, not just from a reporting perspective, but if you also consider the fact that this could, for many people, open up huge opportunity for potential new customers as well coming in, just because of how competitive you could be without having to squeeze any margins in terms of manufacturing costs or whatever it may be.
If prices are, if you're involved in something which is very price sensitive, then this could be a big advantage. And some people don't have to worry about the price of what it is they do because their community wants to buy it, whatever the price is. But a lot of commerce is very, very price sensitive. So this would give you a distinct advantage over your competitors.
I can remember when I was in sales many, many years ago, I would often be asked to sharpen my pencil, as they call it, as in my prices were too high. So I could see that being a real benefit to many people. You mentioned, Iain, about this treasury, and we haven't really touched on that too much at the moment. Do you want to just talk to me a little bit about that? How does this banking that you spoke about, because I know this is surrounding the 508c1a structure, isn't it? How does this banking integrate with this protocol?
So a 508c1a is a classification. It's the United States tax reference number classification, which is for an exempt ministry. So you set up the ministry under that, and people will say, "Oh yeah, but I'm not in the United States, therefore I can't use that." Well, it's not the case at all. The ministry, although it has a tax reference number, which is 508c1a, and it has an EIN number, it is a particular type of structure that doesn't have to report to the United States Treasury. Okay. So it sits on the monopoly board in an exempt, as an exempt entity, and then it can get a bank account. The banks operate non-profit because it's a non-profit ministry. It doesn't make profits. Why? Because there are no profits, because it's just donations. And then what it can do is it can interface with a trust. So we call it the Asset Fortress Protocol, and that is a separate entity, which is an international grantor trust. So typically, the business owner who's become the envoy for the ministry sets up an international trust, grantor trust, and that's something else that is issued by the tax exemption number is issued by the United States Treasury. It has an EIN number. It's different from the ministry. It is a trust, grantor trust structure, and that is able to get a bank account as a trust bank account, international grantor trust bank account, and that becomes the treasury. So that's where if the ministry can put all of its donations, less its expenses, into the private treasury, and from the private treasury, the ministry has a choice. It can either fund all of its expenses from its ministry bank account, or it can transfer all of its donations, 100% of them, into its private treasury, which is the grantor trust, and then it can discharge its obligations, whatever the cash flows are that it needs to pay out, from the private treasury, which is the grantor trust bank account. And the reason why the structure would be better if it's the expenses are coming out of the grantor trust private treasury is because they qualify as abandoned credit. So we talked about the infinite money protocol a little while ago. So those expenses, the payments out of the private treasury, the international grantor trust asset fortress protocol, they qualify for the abandoned credit recoupment. So you can then spend out of that private treasury and then recoup back, and the ministry can transfer its donations into the private trust, the Asset Fortress Protocol, by way of a grant, because ministries make grants, and grants again aren't taxable and aren't reportable.
So lots of benefit. And if you've watched any of our other interviews that we've done together, you'll remember that I said that these protocols stand alone, but they also interlink as well. Many of them interlink with each other. So what we've just mentioned here about having this as a structure, and the reason that we've got the 508c1a, but also the International Grantor Trust, is that you have the ability to then link that with the Infinite Money Protocol. So imagine being able to never pay taxes again in your business, be more competitive, to open up more opportunity for not just your existing customer base from a loyalty perspective, but also new customers coming in, and be able to recycle all the money that moves through your business using the Infinite Money Protocol because you've set the treasury up in the right way. I mean, I can't see any downside to this yet, Iain. I mean, as far as the actual trust treasury itself, another one of the questions that we had was, what can I use that for? Is it purely just for my business? Is there anything else I can use it for?
No, you can use your Asset Fortress Protocol, which is an international grantor trust, with a bank account. You can use it for anything, any personal business. You can use it for spending on anything you want, whether it's related to the ministry or whether it's related to your lifestyle if you are the business owner. So you don't have to have a separate one of these. You could have, if you really wanted to keep them separate, you could have one for personal and one for your ministry, but you don't have to. You can have one that does everything, because it depends on what type of business it is. If it's a business where there is a dominant figure in the business, then she may want an asset fortress protocol. But if it is an organization with many people involved, they might all want their own asset fortress protocols for their own reasons. They might all want to separate the donations up in a different way. I mean, when I was in a professional partnership for a while, there were 3 of us, and we all had our own partnership bank accounts. So we had like a limited liability partnership. So you could do it like that. It all depends on what you're trying to achieve. It's horses for courses, I think. So
I suppose how big the business is and how many people are at the table of that business as well. So that brings us really nicely on to the next one, which is how does the Commerce Protocol actually integrate with the Infinite Money Protocol and the Asset Fortress as well? How do those 3 interlink, as we say?
So you've got step 1 is the ministry, which is a 508c1, exempt ministry with a bank account. That's where you take in donations. That gives you maybe a price advantage. You're promoting your cause, which is your mission. You have a mission statement. Your ministry is going to take in donations. It can then transfer those donations by grant into the Asset Fortress protocol, which is the private treasury. And then from the private treasury, if you've got expenses, personal, ministry related expenses, you can send those out from the treasury, which is your Asset Fortress protocol. And that means that what's actually going on there, and if you've listened or watched the Infinite Money protocol interview, what is really going on there is the issuance of negotiable instruments. Yes. So your Asset Fortress protocol is issuing new negotiable instruments in this big game of commerce, this monopoly game of commerce. And that is then, the banks are then operating as nominees for the Asset Fortress protocol, which ultimately the beneficiary of that Asset Fortress protocol is a living soul. That's where the energy comes from to create the credit. The credit converts to currency. The banks do their, they're operating as nominees. So they are using that credit for their own purposes. I explain all of this in my in the Infinite Money protocol. But the negotiable instruments that are pushed out onto the monopoly board, they are basically abandoned, or the tax treatment of those negotiable instruments is abandoned credit, and it can all be recouped through tax filings, which is all done via the Infinite Money protocol, which means that if you receive $1 of grant from your ministry to your Asset Fortress protocol trust, and then you send that $1 out, or £1 out, or €1 out, then you can recoup that £1, $1, €1. So you are basically creating a spend and recoupment cycle from your Asset Fortress protocol treasury, which is going to go up and up and up, because the more your ministry every year makes grants into your Asset Fortress protocol, you then push that out into new negotiable instruments. That's spending for the use of commonly used language. So that cycling of spending and recouping is going to go up and up and up. It's going to escalate up, a little bit like how the banks operate, because that's pretty much what they do in something called hypothecation.
Okay, I gotcha. So if we've got the ministry bank account, which you can't recoup from, which is the 508c1a ministry, not to be confused with a 501c3, if anybody's wondering, because it's completely different. But if you've got that in place, let's say that you were a company who provided a service, but you relied on other companies to manufacture components for you, for that business, for you to be able to provide the end product or service that you were providing. So you may have a customer that pays you £100,000 for this particular item, let's say. But that £100,000 that they've just paid you not all of that belongs to you, because you've also then got to pay the manufacturer for their part. Maybe their part in making it for you was 80,000 and your so-called profit was 20,000, just as an example. Which bank accounts do you use out of the 508c versus the 98 grantor trust treasury account? Which of those bank accounts do you pay your suppliers from? Because if money is leaving the bank account, you can recoup that from a 98, but you can't from the 508. So would you move the money from the 508 to the 98 and pay your supplier from there so you could recoup all of that?
So what I would do is I would take donations into my ministry, and then I would make a grant from my ministry to the Asset Fortress Protocol, which is the grantor trust, private international grantor trust. And then I would pay the supplier of the components, whatever it is, 80,000 in your example, from the Asset Fortress Protocol treasury, which means that I can recoup that. In the next year, the next tax year, I can recoup the previous tax year's spending. Let's just call it spending.
Yeah. Did you catch that? Did anybody get that? Instead of you taking the profit of the 20K, you actually get to keep the 20 plus recoup the other 80 because you're using that, even though that wasn't your money. But what is money anyway? All you're doing by moving that 80,000 from your 98 grantor trust account to the supplier that you so-called owe the money to, you're creating a new negotiable instrument. And because you created it, you can recoup it back. I want people to sit on that for a minute, because that's huge, Ian, when you think about it, isn't it?
It's infinite money. That's why I call it the infinite money protocol, because the more you push out, the more you recoup. So if you start with one, and then you push one out, and then you've got another one coming in, you've got 2, and then you've got 4, then you've got 8, then you've got 16, so on and so forth. You're multiplying up the amount that is leaving and coming back in again. Now, that's infinite money. That's why I call it infinite money. And it's a bit of a spiritual thing as well, because energy is infinite. It's all energy.
Yeah. And talking of energy, I had this exact same conversation with a gentleman yesterday who runs an energy company, not like the typical energy companies that we know. This is somebody who is absolutely committed to providing free, abundant energy for everyone. And this particular person and his business partner have, between the two of them, put a substantial amount of their own money into this. All their savings, around £6 to £7 million of their own money, has gone into this business. That's all gone on development and on research and all the rest of it, and premises and staff. And they're now solely reliant on investor donations. So when we mentioned and when we spoke about how this works, how the commerce protocol works, and how the infinite money side of things works, I could see this guy's eyes lighting up, because for him, it wasn't about making a profit. It really wasn't. He is just so very passionate about bringing affordable, abundant energy to the masses that he could now see that as a vehicle to allow him to do that by recycling the money that comes in and out of his account. So if you've got a business or something that you are really passionate about, but maybe not everybody else is, or they haven't adopted it yet, or they don't quite get it yet, but you know that this is something that will benefit people, how amazing that would be.
Well, I mean, I would say that in that example, he's going to have a problem in promoting that as a commercial venture. But as a ministry, where his community that wants that benefit, they want that energy, and they make donations for it, then I think that would be a really smart structure in that scenario. Because you go out there through a company, have to report everything, and have to claim that you're making a profit from selling free energy. I've got a feeling that would be a problem for him. with the other energy companies, and
Yeah.
the cabal wouldn't like that
Yeah.
too much. So.
Exactly. Well, that brings me very nicely on to the next question, which is, can I use this for an existing business?
Yeah, I mean, you can transition this. If you're running a sole proprietor or a limited company or a partnership or any of these structures that are out there, S corps, they're all called different names.
Yeah.
You can just scale those down, and you can tell all of your customers, look, we've moved to this model. We've moved to a private model, and we're no longer going to be sending you an invoice. We're going to be asking you for a donation. Don't worry about the tax treatment of that. It's the same. We've modified our website. We've got a mission statement on there. We've got a new bank account we want you to pay into your donations, because that's a ministry bank account. And that's pretty much it. It's not that difficult, really.
No.
You scale down the existing commercial structure, and you gradually replace it with the commerce protocol. Or you can just stop and start up. You can stop one day on the commerce, the existing one, and start the next day on the other one. It's up to you how you do it. So not difficult, in my opinion. So
perfect. Well, I think we've covered everything there, but just to wrap that up, question number 7 is what are the real world benefits here that I would notice once I implement this protocol?
Well, there are 3 main benefits. The first is that it's private, so you don't have to declare anything. There's no reporting, there's no digital ID. The next one is tax. There's massive tax savings.
Yeah.
Huge, enormous tax savings, depending on what sort of cash flows that you're experiencing. I remember my tax bills were eye-watering. From I had a very high income stream at one point, so the tax bills were just eye-watering amounts. So that's the next big benefit, and the really big benefit, in my view, in my opinion, apart from privacy and taxes, is the fact that you can multiply your cash flows and your prosperity through the infinite money protocol. And that will transform. If you're in some kind of environment where you need more funding to develop things and you can't get it from the banks, or you don't want to go and get it from investors, why not do this? Because everything that you're spending now in your business could be recouped. Add that up year by year. That's an increasing budget that you didn't have, or you don't have now, but you will have when you start recouping it. You can add it to your R&D, your development, whatever it is you're trying to develop. Massive advantage. It would make your organization so much more prosperous. And personally, you can take out much larger amounts from your asset fortress protocol. You're not taking out dividends. You're not taking out profits, because there aren't any. You're just getting, as a beneficiary of the asset fortress protocol, you're just taking a cash flow out. And there's no tax to declare on that either. So from a business point of view and a personal point of view, so much more prosperity. Yeah.
So as I see this, the benefits that we've got here is total privacy and zero reporting. You've got this donation grant treasury model that keeps you, like you said, it keeps you off the monopoly board, but you're still engaging in commerce on the monopoly board. So you kind of get the best of both worlds there. You've got the trust that runs the treasury, not you. So you are purely the beneficiary. And then you've also got this new revenue stream that we haven't touched on yet, but I know we've spoken about this on many occasions in terms of advocacy as well. Can we just touch on that, Iain? Because we've got this mechanism here where we talk about the infinite money side of things and how people can multiply their cash flow there for their business. But there's also another benefit to doing this, isn't there? Which is the advocate model.
Yeah, I mean, if you want to introduce this whole structure to other people that that's an advocate. You may want to introduce it to others in your who supply things to you, your suppliers. So you might say, hey, why don't you ever look at this? You could massive advantage for you. Well, if you introduce those suppliers to you, that supply to you whatever they're supplying, and you introduce the concept of the commerce protocol to them, well, you're going to get a share of cash flows that are generated from that as an advocate. So, not only can you get more prosperous through the spend and recoup and the recycling of all the cash flows from your private treasury, but you can generate a new cash flow, a passive income cash flow from just by introducing this. You're not actually setting it up, you're not selling it, you're just referring people to our program, and we do the rest.
Yeah. And if your business is benefiting from that, and your contacts or customers or suppliers can see how much you're benefiting from that, then why would they not want to look? Why would they not want to get onto that same model? Yeah. And then the last one that we mentioned, which was obviously being able to recoup past and future spending. So if you're struggling with your business right now, this is a way for you to never have to struggle again, for you to be able to run your business, take those stress levels down, focus on, whatever it is that you are passionate about within that business, and just know that you can do that year on year on year. So I don't see any downsides to this whatsoever. I think that, if there were any concerns or objections, let's cover those. Let's go through what we've considered to be the 3 top objections that we've seen. And I know what the first one's going to be. People are going to think this is some kind of loophole. This sounds like tax avoidance. Is it lawful? Am I going to get into trouble? How would you answer that, Iain?
Well, you see, if you're not declaring, and the word declare, an income because your ministry is taking donations, you're doing it perfectly lawfully. Do you think the Catholic Church is paying income tax? No. You're not doing anything other than any other ministry or church is doing. So it's not avoidance, and it's not some kind of evasion scheme. What you've done is you have used the law of religious belief, because you can have your customers can become envoys and can believe in the benefits of what you're providing. That's a religious belief, and nobody can say, hey, you can't have that religious belief because you're not permitted to have it. No, you have a right of religious belief. So if you are a customer who believes in the benefits, well, why, nobody can tell you that you can't make a donation to further the ministry that you're aligned to. So yeah. It's not an avoidance scheme or an evasion scheme. It's perfectly lawful. And churches, by the way, have been doing this for as long as they've been around. They've been taking donations in for as long as all the history I've looked into. They've always done it. People put their entire estate into the church sometimes when they die. Yeah. Do you think the church is paying tax on that? No, because it's a donation.
Yeah. Yeah. And like we said earlier, I think people need to kind of really get their mindset shift in the right place with this. I think this is way more acceptable now, this terminology, than it ever was before, commercially speaking, because people are using, like we said, people are using this type of terminology now. We're not asking people to get biblical here or anything of that nature. We're simply saying, if you follow someone or something religiously, football is a religion for many people, isn't it? It doesn't mean that they are going to a church or of a denomination. It just means that they are very passionate in their belief about a certain thing or subject. So you can be religious about anything you want. It's a state of mind and belief. That's all it is.
It's a belief in something.
Yeah. The next question was, this seems really complicated. And I know that it might sound it, the whole purpose of these pep talks is to try and make the complicated less complicated and just to try and make it make sense. I hope we've achieved a little bit of that towards the end. But if, how could I run a business like this if I'm so preconditioned into the typical reporting and sending invoices and paying invoices and doing my VAT? To me, that sounds more complicated, in all honesty, doing all of that.
Arguably, this is easier. It's simpler because you don't have an accountant. You don't have to keep all your records. So that would be interesting for a lot of, I know a lot of entrepreneurs don't like all the record keeping. Yeah. You have a ministry bank account. It can take donations in through credit cards, debit cards, bank to bank transfers. It's no different there. So yeah, you might want to reconcile everything. I'm sure you want to know where your cash flows coming in and going out are. I'm sure you'd want to know all that, but you're not having to report it. So that's got to be a lot of burden of reporting gone. You're not going to pay your accountant every year because you don't need one. Why do you need? You don't need one. You're not reporting an income, so you don't need one of those. However much you're spending on that. So the accountants out there aren't going to like me for bringing this to the market, I don't think. But there you go.
That's might though. The bookkeepers might.
The bookkeepers might love it because they can carry on doing their bookkeeping if the structure needs it. So it's easier. You're operating a bank account for a ministry and a trust rather than operating a bank account for a company or a partnership or a sole trader. It's the same thing. Your paperwork might change. You might not have to put tax reference numbers on your invoices. You just change them to donation notice. It's a simple thing to do. You put a mission statement on your website. You quote on the bottom of your website, then the 508c1a. It's a ministry. That's it. I mean, the rest of it is pretty simple for me. I mean, managing the cash flows. You moving your cash flow from your ministry to your private trust. That's bookkeeping. That's an internal cash transfer. To me, it's not complicated at all. In fact, I say it's simpler than what a lot of people are doing now.
Yeah, not doing your quarterly VAT returns and all of that jazz. You're not having to do any of those things. You're not having to think about dividends as directors or director loan accounts or any of that stuff. There's none of that going on here anymore. Yeah.
No self-assessment. You don't have to worry about all of that reporting. It's all gone. So now, if you've got credit, for example, that the business has got some kind of credit line, that may have to be renegotiated. That's one of the potential issues that would have to be looked into. It depends on what it is. But banks, generally speaking, if they can see the revenues are coming in, I don't think it would be a problem if you've got an existing facility where you could perhaps move it over.
Okay.
The banks don't care about what you call yourself. They care about whether they're going to get paid back the negotiable instruments. So
yeah. So when it comes to making the shift and moving over, if I had a limited company and that was obviously registered with Companies House here in the UK, how do I change that from being a limited company to being a ministry? How does that work?
Well, you'd set the ministry up and you'd keep the company probably, and then you'd run it down. You'd transition away from it. You might do it all in one go. You might do it gradually. And then ultimately you clean up the company and you make it dormant. And then you don't have to report on the company anymore, because dormant companies you don't have to report on. I think once every 5 years, I think you have to send some return in, or you can just strike it off. You can just strike it off the register after a while. You don't need it anymore. It's not doing anything. And then you've moved all of your donations, into your cash flows coming in, donations into your ministry, and it's it. It's very simple. It's no different from a lot of people would start off as a sole trader. They might become a partnership, and they might then go into a limited company. You would run one down and run another one up. Probably transition it.
Yeah. So it's nothing that people have maybe not already done. Just a different structure, just another structure, another business structure. No different to, like you said, there's all these different reporting structures. There's limited companies, there's partnerships, there's S Corps, there's C Corps, there's all these different things. So people are used to different business structures. This is just another structure that you can benefit from way more than any of the others that you may be used to right now. That's all it is. The last question that was on the list here, or the last concern, is how do I know my income's safe? If everything's going into this ministry and into a trust, how do I know that's safe?
Well, you're in charge of it. I mean, you're the head envoy of your ministry, so your name's on the bank account. It's no different from having a limited company bank account or a partnership account. Your name's on the account, so you control the cash flow, the donation cash flow coming in. You're the trustee of the Asset Fortress Protocol. So when I say you are, the corporate entity, the birth certificate entity, is the trustee. The living man, woman isn't the trustee. They're the they're the beneficiaries.
Yep.
So they receive the benefits of the private grant or trust, the Asset Fortress Protocol. But the trustee is the same as you've got now. The limited company director shareholder is the birth certificate entity. It's the person, the same as it would be if you had any kind of structure on the monopoly board. At the moment, the person that you represent, because you're a living soul, you're representing a corporate entity known as a person, is getting a bank account. Well, your ministry is getting a bank account, and the ministry, the trustee of the ministry is the body corporate, which is the birth certificate entity. It's no different.
Yeah.
It's no different at all. You are in complete control of it, as you are probably now. Or some of you might not be, because you might have other people with their names on the bank accounts. But basically, you are in control because the name of the body corporate birth certificate entity is on the bank accounts.
Well, I can't think of anybody that wouldn't want to do this, Iain. I really can't. There's so many companies that are feeling under the thumb right now. And I know there's a lot of people out there that are concerned about this new digital reporting that's going to be taking place. You know, these whole cash in hand days are gone, aren't they? They really are. People doing business cash in hand. People maybe not reporting when they should report and hoping they're going to get away with it. There's a fine line that people are sailing on at the moment just to stay afloat and just to survive, because they're providing for their families, or in other instances they're so deeply entrenched into something that they're very passionate about. They don't want, giving up is not an option for them, whereas this gives them a real legitimate way of being in the private, non-reporting, but still being able to conduct commercial activity in the public without paying all of these ridiculous fines and taxes and everything else that goes along with it. So I think it's fantastic. I love how it integrates with, with the Treasury, with the infinite money protocol as well, and how, depending on how big your business is, I suppose, like we said, you may choose to have an asset fortress separate to the business, but because you have a private treasury as part of the commerce protocol, you can put whatever you want in there as well. So you can put your personal assets in there if you wanted to. So many benefits. I mean, in terms of wrapping this up, any last words that you would say to people who are currently running a business, maybe struggling, maybe they're not struggling and they're doing great, but they see the benefits to this structure?
Well, if you're interested in privacy and prosperity, then I think this is a real contender for a bit of your time to have a look at it. If you're looking around and you're thinking, well, maybe I should go and set up offshore companies, maybe I should go and get trusts, maybe I should go and employ someone to put all this together, I'll tell you now, you're going to spend a lot of money doing that stuff.
Yeah.
And it's not as efficient as this. I've done a very good comparison document on what does it look like if you've got an offshore company, what does it look like versus statutory trusts. These things that are commonly available don't compete, because they're all on the monopoly board as reporting entities.
Yeah.
And that's the problem. There's no recoupment of abandoned credit. There's no cycling that abandoned credit recoupment. You've still got to report. Even offshore companies now have got to report. They're tightening the net on offshore companies. So you used to be able to set up offshore companies and not have to report cash flows that come and go from those. Now they're tightening that down. So the offshore advantage is no longer really anywhere near as much as it used to be, and it's still reportable to someone. Whereas a ministry doesn't have to report anything to anyone. That's the key difference. And you've got the recoupment, which you don't get with an offshore company structure.
Yeah. And I think that's the difference, isn't it? It's non-reporting, So it's not one of these loopholes. Loops can have a habit of closing in on you if you're not careful, and we don't want that. So Iain, I appreciate you jumping on, and thanks for explaining that. It's certainly been a bit of an eye-opener for me to understand, just thinking of it from a business owner's perspective and what I can and can't do with this. Really a real game changer yet again. So I look forward to the next chat. I look forward to the next protocol that we're going to go through. We've got several left to do, so look out for those. And we will see you on the next episode. Bye for now, guys.
Bye for now.